Which bank should you choose? Now, the question is, which accounts? And in this video, I'm going to describe to you why it's in your best interest, however you do your business, S Corp, whatever it is. I want to make sure there's a business bank account that's tied to it. We'll show there's business income. You find out why did I get rejected, and then you get more answers. And that's how I'm bringing it to you live here. That's right. Not all institutions are created equal. We had a deal where we paid like $18,000 on a creative finance deal. It came with a tenant, the house, and the furniture. Let it hit the institutional bank, the big banks, because you will get credit for it down the road. Which bank should you be using when doing the short-term and or mid-term rental model? My name is Ruben Kanya, and I am a temporary housing specialist where I help investors nationwide turn their quarterly rental income into their monthly income by leveraging these creative strategic strategies by working with business to business contracts versus business to consumer, aka Airbnb. Now remember, we still leverage Airbnb. We still love to get our payouts from Airbnb to hit our accounts. Now the question is, which accounts? And in this video, I'm going to describe to you why it's in your best interest to understand the different options that are available to you and which one is probably the best one for you to optimize and choose for you to get more money for the money that you're already getting paid for. What do I mean by this? It means, number one, rule of thumb. Again, I speak from experience, having done a lot of different creative financing strategies, getting paid out in different banks accounts, you name it, from Bank of America to Chase to the Citizens to the Relay Financials. We love our fintech banks, and they all have their advantages and disadvantages. So let's talk about it, shall we? Let's unpack it. So when you are getting paid out, if you are an Airbnb guest or an Airbnb host, I should say, you're getting paid out, number one, you should definitely make sure that it's hitting a business bank account. That way you can start building that history, right? Which means that when you're getting into the payout section on your Airbnb, if we start there first, that it is hitting a business account. For you to have a business account, you must have an EIN. Make sure you open that up. When you are opening up an LLC or whatever, however you do your business, S Corp, whatever it is, want to make sure there's a business bank account that's tied to it. We'll show there's business income. Now, one thing that we recently found out is something interesting. Well, that might be the bare bones of kind of where you're at. I'm like, of course I'm doing that already. Great, check mark for you. Now, how about the other type of banks? So you may have heard of Relay Financial, and if you haven't, check it out, relayfi.com. We have no affiliation with them. We've used them, and they are super because they allow you to make it super streamlined, to have pay vendors, to create virtual accounts. You can have up to I think it's like 20 or some odd accounts that you can have. For those of you who read Profit First, it's really good for you to be able to implement that model where you pay yourself first, have an OPEX account, have capital expenditures, have security deposits. You can kind of create those on the fly, even create virtual debit cards, etc. The whole 9 yards, super good for backend. Now, while it's super good for backend, one thing I'm figuring out, how do I know this? Because I've gotten rejection, and we love rejection because there is either a lesson, right, that you learn from that gives you a little bit more insight, and or you just you just take that. You don't just say I got rejected. You find out why did I get rejected, and then you get more answers. And that's how I'm bringing it to you live here. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it, and continue on with the gems in this video. So fintech companies like Mercury or like the Relay Financials, they're great for backend operations because they're technology platforms, but a lot of the underwriters still to this day are giving those companies a hard time. What it means is you might have $30,000 worth of reserves, 10,000, 40,000, or maybe you're making 10,000 a month, 15, maybe $100,000 a month, and it might be sitting in those banks. And what will happen is the underwriters who are a little bit old school, a lot of bit old school, are not going to give you the credit that you deserve for getting payouts for the hard-earned business, right? That you're doing. If you're watching this video, it's because you want to make more, right? How to 3x your quarterly income into your monthly income. That's why you're here. So what happens when you actually start getting that? Some of you guys are getting checks. If you're watching this, you might be getting a check from a temporary housing company or an insurance company that's paying you, or a relocation company that's paying you, or maybe you're getting booked on Airbnb through a short-term rental or even a mid-term rental insurance. We see a lot of Airbnb for work. Now the question is, when it hits your account, are you getting the credit? Is it opening up another lever for you to pull on? When I say credit, it means that will a banker look at that and be like, oh great, you have a cash flow business? It should, if it's hitting a right business account, and it should if it's hitting the right institutions. That's right, not all institutions are created equal, and you'll find out why in this video. So now when you think of the Chases of the world, the Bank of Americas, the ones that have been established for a long time, a lot of these underwriters value money that's sitting in those accounts more than they value money that's sitting into a Relay account. And again, shout out to Relay, you guys are awesome on the back end, but you are new to the game, and these old heads, that's right, I said it, these old heads are looking at you like, that's cute and all, but we don't know what that bank is. And even though it might be FDIC secured, just like all the other banks, they don't respect it. And when you're looking to get financing, as in, or credit, when I say credit, I mean like literally someone looking at you and saying, oh, because you're getting all this cash flow, I'll give you a line of credit for $20,000, $25,000, 30 or 40, 50. And the reason that's important is if you're anything like me or like us as an operator, you can use that as lever to, let's say, finance your furnishing, right? Or, you know, buy furniture or put a down payment on a creative finance deal. We had a deal where we paid like $18,000 on a creative finance deal. It came with a tenant, the house, and the furniture. How about that? Not having to use your own money, because now you're using money that can be worked for other things, right? That's what we're talking about. So if this isn't for you, you're like, oh, I don't want to use credit, blah, blah, then I'm probably not talking to the right person. But if it's like you understand how much it takes to spend on furniture, design, or even having the right things done on the house, remodeling, or adding just additional amenities that will give you the upper edge, you can do that on credit. Now, I'm not a credit guy by any means. I just want to highlight that there's a difference in which bank that you use, and some banks will give you more credit. And from my experience, like the Chases of the world, the Bank of Americas of the world, the well-established banks, you want your money to hit those accounts. Now, Ruben, what do I do with my Relay account? Well, what we're doing now, and it's still an ongoing experiment, we're going to use that for back-end operations, right? So we're going to keep a certain amount of reserves in those accounts, but we're going to have the majority of the money hitting the established institutions, because we want to have them see that our cash flow is high, right? That we're getting a bunch of these direct deposits that are hitting our account, these Airbnb payouts that are coming in, these large insurance contracts that you guys are landing because you are subscribed to this channel. If you haven't done so yet, subscribe. And I know, because if you're watching, there's a good chance you've been watching enough of my videos, you've actually probably landed several large contracts, and or you're leveraging for Furnish Finder and you're still leveraging someone to send you a wire. Let it hit the institutional bank, the big banks, because you will get credit for it down the road, as opposed to some of these little, again, fintech, super savvy on the back end, but not so savvy when it comes to being able to get recognition from the other banks. And it's a damn shame, but really, don't hate the play, hate the game. That's what this is about, really. I'd love to say that, hey, you need to get on board. As a matter of fact, I've stood out there on behalf of these banks and said, this is a great bank. It's FDIC backed. It's right. And this is not to put anything on Relay. They're doing what they can. They're newly established into the space, right? And I'm picking on Relay, but there's can be many other small banks that can work. But it's in your best interest to have, again, an institution that is recognized and been well established for decades, to be able to be recognized from that bank to get other funding, or from other third-party companies who will use reserves that are from banks that they know to qualify you for, again, credit, which we know can go a long way if you know what to do. Last but not least, that's from the third-party perspective. But from these institutions that have been around for a while, they might also have other products, right? Where they can look at your reserved and give you even more different options that you can explore. By the time you're watching this video, there might be more. You just want to have your money where there's a lot of different products that they can offer to you, rather than having it in a place where they maybe are super good on the back end for you. And so you should hold on to them. Don't get rid of them, but have the majority of your money. I'm talking about like 80% to 85% of your money sitting in those institutions that will then, again, open up more doors for leverage, because all this is a game of leverage, right? Leveraging your home for more rental income by leveraging these companies that have the money to pay you, like these insurance companies or the relocation companies, or this guest that has a high taste and is willing to pay a premium to stay in your short-term rental or your vacation rental. All this is a lever that you're pulling, right? Traditional homes typically are not furnished because someone didn't leverage the furniture, and the furniture adds a lever where you can charge more. When again, it is furnished accommodation, it's on the right platforms. You've created and curated and fostered the right relationships. It opens up another leverage for ongoing businesses. This is about leverage. The last thing you want to do is put yourself in a position where you literally could be getting more leverage by not having to do more than changing something one time. Again, one change, one paradigm shift in how you're looking at this can change the outcome and the leverage that your business has, which can then ultimately change the trajectory of your business. Don't sleep on it. Which bank should you choose? Remember, I don't think it's or the fintech companies, it's and the fintech companies and the institution banks that have been established for a long time. A happy hosting. Make you sure that you have leverage that you can use and apply for a long time as well.